As a professional or aspiring trader, overtrading is something that you probably experienced in your journey at some point in time. It is a very expensive urge. It is a psychological issue that a lot of traders face in your trading journey. And in this video, I'm going to be sharing some of the tips that have helped me over the years to combat overtrading. You can take the steps and apply them to your trading process today, and they will help you to overcome overtrading or minimize the effect it has on your overall day-to-day trading. Let's get right into the video, guys. The first thing when it comes to overtrading that you want to stop doing is trading too many currency pairs. In the Forex market, you have 20 plus currency pairs that you can trade on a day-to-day. Less is more when it comes to this, right? Because the more currency pairs you trade, a lot of traders think that the more profit you can make, but that's not the case, because as a trader, your focus should always be capital preservation, looking to put your risk only towards the best possible trade. And when you're trading too many pairs, there will always be an opportunity. So even when you come into your trading day and you're looking at different currency pairs, you're looking at pound dollar, pound yen, dollar CAD, and you're not seeing really good opportunity, and you just continue to scroll through until you see an opportunity. That's not going to give you consistent results, right? You need to know what you're looking at, what you're looking for on a day-to-day. And what I recommend is, scaling back to 1 to 5 currency pairs, right? That way, you know the key levels to every market that you are constantly trading. You know what the market is doing, and what that will allow you to do is just, if there's no trade for that day, right, and you look at 3 of your currency pairs that you're trading, right, or 5 of them, or even 1, there's no trade, right? So it minimizes the amount of shitty trades that you take and maximizes your wins, because you are only focusing on taking trades that meet your criteria. But when you have a plethora of trades that you are taking on a day-to-day, right, odds are you will take mediocre trades just because. And this is what happens when it comes to overtrading. So I recommend that you focus on a handful of currency pairs. So less is more. Focus on a handful of currency pairs. The second thing you can do is focus on a specific session. We have 3 sessions in the market: London session, Asian session, and the New York session, right? As a trader, whether you're a beginning trader or even a seasoned trader, it's easy to trade around the clock because, very similar to taking, looking at multiple currency pairs. The market's always open. So there's always something moving. There's always a currency pair that you can take that is moving. Whether you look at the Asian session, you can look at, Japanese yen. If you're trading the New York session, dollar CAD or something, whatever you're taking a look at, there's always an opportunity there. But when you start to focus on a specific session, becoming an expert at that specific session, right, all the noise starts to go away. So you're no longer looking at the London session to trade, right? Or waking up to trade the London session, or, looking at the Asian session for an opportunity, because you've narrowed down your trading approach. And what this teaches you is consistency. What I'm talking about here is not just a step or a way for you to overcome overtrading, but it is also a way for you to build consistency in your overall trading process, narrowing down and focusing, directing your focus. As human beings, you always hear, whatever you focus on, you can achieve. Whatever the mind can conceive, it can achieve. Very similar process. Whatever you focus on, you get better at, right? So let's go over to the chart here. Okay, so we're on the charts, taking a look at dollar CAD 15-minute time frame. When it comes to picking a specific session to combat overtrading, the goal is to pick one session and trade that session. And when it's over, right, when the session is over, you are essentially done trading for that day. But you might say, hey, Emmanuel, for example, the New York session runs from 8 a.m. to 5 p.m. Eastern time. Does that mean that I should be trading from 8 a.m. to 5 p.m. Eastern? And the answer is no. Each session has a 3 to 4 hour window where you will see an influx of liquidity come into the market. That's what you want to focus on. And that's what I'm going to be showing you here on the charts, because when that 3-hour to 4-hour window is over, the market usually goes in a range and essentially nothing that happens for the day that is major. So taking a look at dollar CAD 15-minute time frame, I'm gonna just show some of the examples that I have here. We're focusing primarily on London session and the New York session. So when you take a look at this, right, we know the London session starts at about 3 a.m. Eastern time and does overlap the New York session, but the beginning of the London session, if you want to just trade the London session alone before, without trading the New York session as well, right? You want to focus between 3 to 5 a.m. or 5:30. But what I always recommend is show up an hour before, because, like pre-market. So if you're trading the New York session, rather than showing up at 8, when the moves start to happen, show up at 7. So very similar here, London session, 2 a.m. You're showing up at 2 a.m. And, you likely see the move starting to happen, 2 a.m. Boom, we get the dip at about 3:15 and we start to see the market, rally to the upside. So 2 to 5:30 after that, the market settles down and waits for New York session, for New York traders to start to come into the market, and more liquidity will start to come into the market between 7 and 11. And what we start to see in this box here is, from 7 to 11, right? And that's when we see a lot of the move. And after that, the market just range, right? Not much is happening. So if you take a look at another example here, we can see the same thing. From 2 a.m., we start to see price push to the upside till 5:30, and we start to see price pull back, setting up for the New York traders to come in, and boom. So New York session from 7 to 11, we see more action in the market, right? So 7 to 11, after that, we start to see a range bound market. So when I talk about focusing on a specific session, these windows are what you want to look for in whatever pair that you are focused on trading, because when you do that, you're able to get the large portion of the pie. And more importantly, you don't have to trade around the clock to get these kind of moves. You just have to come in at the specific time and these moves will present themselves. The third strategy I utilize is what I call a 3-strike rule. And this is something you might have heard of in baseball. A strike is essentially when a hitter misses a pitch. You miss it 3 times, you're out of the game. I implement that for my trading because it's a way for me to know when I'm having a good day or I'm not having a good day. If I take 3 trades and I lose all 3 trades, I know it's not my day, so I walk away and that's it. I'm done for that day. And generally that also fits within my risk parameters as well. So if you're risking 1% of your capital, right? Maybe your max risk is 3% for the day. So you can split that up into 3 trades. Let's go over to the charts and show you a little bit of a breakdown of what I mean by this and how you can actually implement it from a weekly perspective. Okay, so we're taking a look at gold hourly time frame, and what I have here is a week of trading. And when it comes to using my 3-strike rule, one of the things that I like to implement, or I started to implement, was knowing the weekly range, understanding the weekly range in terms of when is the market given, when can you have a higher expectation, and what days can you be a little bit more conservative. Because just because you have a 4-strike rule, 5-strike rule, or 3-strike rule doesn't mean you should use it every day. So in order for you to now use it properly, you have to understand the days that are generally more given. And in the market, Mondays generally price is still setting up. You're not going to see a whole lot of action in the market, or at least to the direction where price is supposed to be going, right? And we see that here on Monday, we have a little push to the upside, and Tuesday, price starts to move, and Wednesday, Thursday, price starts to move in the overall direction of where it's going to be going. So these 3 days are generally the days where I am likely to use my 3 strikes. Whereas Monday, I may take a trade. If it doesn't work out, I'm done, because there's not a whole lot of expectations, right? Whereas Tuesday, if I take one trade, it doesn't go in my favor, I may take another trade. If that doesn't go in my favor, I still may take another trade as well. Or sometimes, I just wait till Wednesday or Thursday. But just so you know, these days are likely days where price will actually look to fill the weekly range. And this is something I can talk a little bit more about in other videos if you don't understand how the weekly range works. It's just, from a weekly candle perspective, what days are likely to move in the direction where price is likely to move. So don't want to get into that. Right now, taking a look at what we have here. Knowing when to use your strike rule is very, very critical for success, because you don't want to put your capital at risk or stretch it to the limit every single day. So even though you have a strike rule, you want to still be conservative some days, and days like Monday and Friday are usually the best days to be conservative, and Tuesdays, Wednesdays, Thursdays, price tend to be a little bit more giving. The last strategy when it comes to combating overtrading is focusing on breathwork. Because when you're overtrading, right, your body is having a physiological experience to what you're experiencing psychologically, right? So overtrading is a psychological issue, but you feel that you feel the impact on us on a physiological level, because your heart rate starts to increase. You start to, feel tension, and breathing is something that calms you down, that relaxes your mind, but it also relaxes your body as well, right? So when you focus on staying calm, right, you actually stop your brain from getting hijacked. And there's a part of your brain called the amygdala, which is in charge of processing, fearful events. When you start to overtrade, right, you go into a very difficult territory, that, your body or your brain process it as fear, because you're risking capital back to back, which is essentially like revenge trading as well. So really focusing on breath work and calming yourself down is always a good thing, because you make better decisions when you are calm and when you are relaxed. So that's my tip for the video, guys. Hope you found it insightful. Leave a comment down below. Let us know, what are some of the things that you have used in your trading journey you're currently using right now to combat over trading. Once again, thank you for tuning in. If you found this video insightful, don't forget to hit the like and subscribe button on your way out. And there's a new research study that shows hitting the like and subscribe button actually makes you live longer. Don't quote me on that. Thank you for watching, guys. Hope you're out there living free. Peace.